I remember the exact moment I thought I had made it in trading. It was a quiet night, long after the New York session had closed. My screen showed a number that, just a few years earlier, would have felt impossible. I leaned back in my chair and felt something close to pride. Not excitement, not joy. Pride. The kind that whispers, "You've finally beaten this game." If you trade long enough, you know that feeling. The moment when a winning streak convinces you that you've crossed an invisible line, that you're no longer like the others, that you finally arrived. But here's the uncomfortable truth I learned the hard way. Most traders don't fail because they never succeed. They fail because they misunderstand what success actually is. When people talk about successful traders, they usually mean one thing: money. P&L screenshots, big months, freedom from a 9-to-5 job, the lifestyle, the image. I used to believe that too. Early in my career, success meant catching the big move. It meant doubling an account. It meant being right more often than I was wrong. I measured my worth as a trader by the size of my wins and how fast my equity curve went up. And for a while, the market rewarded that belief. I had months where everything worked. Setups felt obvious, entries were clean, losses felt small and temporary. I started to think that discipline was something I had mastered, not something I had to protect. That's usually when the market starts teaching you its real lessons. The first crack didn't come from a massive loss. It came from something much quieter. I noticed that even on green days, I wasn't calm. I was tense, watching every tick, managing positions that didn't need managing, closing trades too early out of fear, then chasing new ones out of regret. I was making money, but I wasn't stable. And stability, I would later learn, is the first definition of real success in trading. Back then, I didn't see it. I thought success was about being aggressive, confident, and bold. I thought hesitation was weakness. I thought slowing down meant falling behind. So I pushed harder. More trades, more size, more conviction. The market, as it always does, waited patiently. When the drawdown finally came, it didn't announce itself. It started small, a couple of losses that shouldn't have happened, a few revenge trades disguised as adjustments, a quiet erosion of trust in my own process. That's when I realized something uncomfortable. I had built my definition of success on outcomes I couldn't control. I wasn't trading to execute well. I was trading to prove something. And that's a dangerous place for any trader to live. At some point, every retail trader hits this wall. Maybe you've hit it already. Maybe you're approaching it now. It's the moment when you start asking questions that numbers alone can't answer. Why do I feel anxious even when I'm profitable? Why does one losing day erase the confidence built over weeks? Why does success feel fragile instead of solid? These questions don't come from beginners. They come from traders who have seen both sides of the market. Traders who know that winning trades don't automatically mean winning behavior. I didn't grow up dreaming of charts and candlesticks. Like most people, I came to trading chasing freedom. Freedom from limits, freedom from bosses, freedom from time. What I didn't realize was that trading would eventually force me to confront myself more brutally than any job ever did. The market doesn't care how smart you are. It doesn't care how hard you work, and it certainly doesn't care how badly you want it. It only responds to behavior. And behavior, over time, reveals the truth about whether you are actually succeeding or just temporarily getting paid. For years, I thought success meant being right. Then I thought it meant being profitable. It took me far too long to understand that both of those definitions were incomplete. Because the traders who survive long enough don't talk about success the way beginners do. They talk about consistency, emotional neutrality, risk containment, the ability to show up tomorrow with the same mindset regardless of what happened today. They talk about survival first, growth second, and ego never. That shift in thinking didn't happen overnight. It came from sitting through losses without panic, from closing platforms and walking away instead of forcing trades, from realizing that the market rewards restraint more reliably than aggression. It came from redefining success as something internal before it ever became external. And that's where this conversation really begins. Because if you're still defining success in trading as making money this month, you're standing on very thin ice. The market might let you stand there for a while, but eventually it will test whether your foundation is real. In the next part, I want to talk about the mistake most traders make when they chase success too early, and the pain that mistake quietly creates long before the account actually blows up.
The real mistake didn't look dramatic from the outside. There was no single trade that destroyed me, no catastrophic blow-up that forced me to quit overnight. What happened was far more subtle, and because of that, far more dangerous. The mistake was this. I chased success before I had earned stability. I treated profits as proof that my process was solid, when in reality they were often just the result of favorable conditions. I confused a good environment with good decision-making. And the market is very good at letting you believe that lie, right up until it decides to take everything back. At the time, I thought the pain would come from losing money. That's what everyone fears. But the deeper pain came from something else entirely. It came from losing trust in myself. I remember days where I would open my platform already emotionally invested in the outcome. I wasn't asking, is this a good trade? I was asking, can this trade fix how I feel right now? That's when trading quietly turns into something else. Not gambling in the obvious sense, but emotional bargaining. One win would calm me down, one loss would throw me off balance. My mood became correlated with my P&L, and that's when you stop being a trader and start becoming a hostage. The market didn't punish me immediately. It never does. It slowly widened the gap between what I thought I was doing and what I was actually doing. I took trades that didn't fully meet my criteria, but I justified them because they felt right. I increased size after wins, not because risk allowed it, but because confidence demanded it. And the scariest part? It worked, until it didn't. That's the pain most retail traders don't recognize early enough. The pain isn't just financial, it's psychological erosion. You start questioning decisions that were once clear. You hesitate on good setups and overcommit to bad ones. You replay trades in your head long after they're closed. Success, when misunderstood, doesn't make you stronger, it makes you fragile. I see this pattern constantly. Traders who have a few strong months and suddenly feel pressure to maintain an identity. They're no longer just trading, they're defending a version of themselves they're afraid to lose. That's when drawdowns become personal. That's when losses feel like failure instead of data. For me, the breaking point came during a period that looked fine on paper. I wasn't blowing up, I wasn't even deeply negative, but I was exhausted. Mentally drained from forcing clarity where there was none, from trying to control outcomes that were never mine to control. One night, after closing yet another trade that followed my rules but still lost, I realized something unsettling. I wasn't angry at the market, I was angry at my definition of success. I had built it on results instead of behavior. That realization didn't hit like a lightning bolt, it felt more like a quiet resignation. A moment where resistance drops and honesty takes its place. I finally admitted something I had been avoiding for years. I didn't actually want to be right. I wanted to be safe. That thought changed everything. I started looking back at my trading history differently. The trades that defined my growth weren't my biggest wins. They were the losses I handled well. The sessions where I followed my plan perfectly and still lost money, but slept fine that night. That's when the revelation began to form. Success in trading isn't about how much you make when things go your way, it's about how you behave when they don't. Once I saw that clearly, my priorities shifted. I stopped asking whether a trade could make me money and started asking whether it deserved my risk. I stopped measuring my weeks by profit and started measuring them by execution quality. It felt slower, less exciting, almost boring.
And that's exactly why it worked. The market stopped feeling like an opponent and started feeling like an environment, something to navigate, not conquer. I no longer needed every trade to matter because my identity was no longer tied to individual outcomes. That was the real turning point. Not a new strategy, not a better indicator, but a redefinition of what success actually meant. Success became the ability to show up calm, to accept losses without emotional damage, to protect capital not just financially, but psychologically, to trade in a way that allowed me to come back tomorrow without fear or urgency. Only after that shift did consistency begin to appear, and when profits followed, they felt different, quieter, less intoxicating, more sustainable. That's when I understood something most retail traders learn too late, if at all. You don't trade your way into success. You define success correctly, and trading follows.
The longer I stayed in the market, the more I realized that most traders are fighting the wrong battle. They think the battle is against indicators, strategies, or entries. They spend years refining systems, optimizing parameters, searching for something that feels precise enough to guarantee success. I did the same. I tested setups endlessly, changed timeframes, adjusted risk models, convinced that one more tweak would finally bring clarity. What I didn't see back then was that none of those things address the core problem. The market doesn't reward intelligence the way school does. It doesn't care how well you understand patterns or how fast you react. What it rewards, relentlessly and without mercy, is alignment between behavior and reality. Most retail traders define success in a way that puts them permanently out of alignment with how markets actually work. They define success as being right, as making money quickly, as avoiding losses. But markets are probabilistic environments. They are built on uncertainty, distribution, and randomness clustered around structure. In that environment, being right is irrelevant. What matters is whether your behavior allows probabilities to play out over time without self-destruction. This is where smart money thinking diverges completely from retail thinking. Institutions don't wake up asking how much they can make today. They ask how much they can afford to lose without damaging their ability to operate tomorrow. Their definition of success is survival with optionality. Everything else is secondary. Retail traders, on the other hand, often trade as if every session is a final exam. Every trade feels like a verdict on their competence. That emotional pressure forces decisions that have nothing to do with edge and everything to do with self-protection. I've seen this play out countless times. Traders with solid systems who sabotage themselves because their definition of success demands immediate validation. They move stops too early. They close winners too fast. They hesitate on valid setups because the last loss still hurts. None of that comes from lack of knowledge. It comes from a distorted definition of success. One of the most important insights I learned came from reviewing years of my own trade data. When I stopped filtering by profit and started filtering by execution quality, a pattern emerged that shocked me. My most profitable periods were not the ones where I felt confident or aggressive. They were the periods where I felt almost detached, where trades were placed calmly, risk was fixed, and outcomes were accepted without negotiation. The moment I felt excitement or urgency, performance deteriorated. That's not coincidence, that's cause and effect. Markets are designed to exploit emotional imbalance. Liquidity is often created where traders feel the strongest need to act. Breakouts attract fear of missing out. Pullbacks attract fear of giving back profits. Volatility expands exactly when emotional control is weakest. If your definition of success depends on avoiding discomfort, the market will eventually force you into it. Smart money understands this at a structural level. They build processes that remove decision-making from emotional moments. Risk is predefined. Size is controlled. Exposure is adjusted not based on confidence, but on conditions.
For them, success is not a winning trade, it's a well-executed loss. That idea takes time to digest. Early in a trader's journey, it sounds almost backward. Why would losing be considered success? But when you understand that losses are the cost of doing business in a probabilistic system, everything changes. A loss that follows the plan preserves capital, confidence, and clarity. A win that violates the plan damages all three. This is why redefining success is not a philosophical exercise, it's a practical necessity. If success means ending the day green, you will inevitably overtrade. If success means feeling good, you will avoid necessary losses. If success means proving you're good at this, you will take trades that don't deserve your risk. But if success means executing your process without emotional compromise, the market finally stops controlling you. I've watched traders transform not because they learned something new, but because they let go of the need to win today. They shifted their focus from outcome to process, from excitement to stability, from prediction to participation. That shift doesn't make trading easier, it makes it sustainable. And sustainability is the only form of success that compounds. Once I truly internalized that, trading stopped feeling like a test of my intelligence and started feeling like a discipline, a practice, something closer to risk management than ambition. That's when I stopped chasing success and started allowing it to emerge as a byproduct of doing the right things consistently, even when nothing exciting was happening.
At some point, insight has to turn into behavior. Otherwise, it stays inspirational but useless. When I finally redefined what success meant to me, the way I traded began to change in very practical ways. Not dramatically, not overnight, but consistently. The first change was how I treated risk. I stopped thinking of it as something to manage after entering a trade and started treating it as the trade itself. If the risk didn't feel acceptable before clicking the button, the trade didn't exist. No amount of confidence or market narrative could override that. That alone removed a surprising amount of stress. I no longer needed the market to cooperate for me to feel okay. My job was done the moment I placed a trade that respected my limits. Everything after that belonged to probability, not control. The second change was how I measured my days. I stopped ending sessions by checking P&L and started reviewing behavior instead. Did I follow my rules when conditions were unclear? Did I stay patient when there was nothing to do? Did I accept a loss without trying to immediately earn it back? Some days were green, some weren't. But the days I considered successful were the ones where I didn't betray myself. That shift quietly rebuilt confidence, real confidence, the kind that isn't dependent on the last trade, the kind that doesn't disappear after a drawdown. The third change was learning when not to trade. This is something retail traders rarely hear enough. Not trading is not failure. In fact, for most people, it's the highest form of discipline they'll ever develop. There were weeks where I placed far fewer trades than I used to. The old version of me would have felt anxious, like I was falling behind. The new version understood something critical. Markets don't disappear just because you stop forcing them. Markets move in cycles. Conditions expand and contract. Your job isn't to extract money from every phase. Your job is to stay aligned with the ones that match your edge. These changes didn't make trading exciting. They made it quiet. And quiet trading, I learned, is usually healthy trading. Over time, results followed. Not explosively, gradually. Smooth enough that drawdowns felt manageable. Stable enough that I stopped needing constant reassurance from the screen. That's when trading stopped dominating my emotional life. It became something I did, not something I was. And that leads to the final lesson I want to leave you with. If you define success in trading as money, the market will control you. If you define it as validation, the market will manipulate you. But if you define it as consistency, clarity, and self-control, the market loses its power over your behavior. You don't need to win every day to succeed. You don't need to be right often. You don't even need to feel confident. You need to be aligned. Aligned with risk, aligned with probability, aligned with who you are when things don't go your way. That alignment is what allows traders to survive long enough to see their edge play out. And survival, over time, becomes growth. If this perspective resonates with you, it's probably because you've already felt the tension of chasing the wrong definition of success. You've seen how fragile outcome-based confidence can be. You've experienced how exhausting it is to constantly prove something to a market that doesn't care. You're not alone in that. Most traders pass through this phase. Very few stop to question it. If you want to continue this journey, learning how to think more clearly, trade more calmly, and build something that lasts, subscribe to the channel and stay with me. In the videos ahead, we'll keep breaking down the habits, mindsets, and structures that separate traders who survive from those who burn out. And before you go, I'll leave you with one question. How would your trading change if success was no longer about winning, but about staying aligned with who you want to be under pressure? That question, more than any strategy, has the power to change everything.